So the issue here is that over the next couple of months, I'm going to look for times where I can get bearish. All the way up until, and this I'll just give you a little bit, I guess we'll digress a little bit, but my attitude on the marketplace is, even though we had the cutting of rates, that usually when you get into the end of October and we got that big event in November, the presidential election, all the way up until that date, I'm going to lean to the bearish side of things, and I'm going to look for trades in underlying stocks that I'm willing to get bearish on. So that's the reason why I'm looking at that. Okay, so the first leg is actually out of the money to start. So let's talk about that. If we're at strike C, and you notice as we go further down the chain, the options become cheaper. So that's your first hint that we're out of the money. The stock is trading right around here. It's actually 7 points higher than strike C. So if you look at my mouse, this is actually where that stock is trading at. And then as you go down, you get further and further out of the money. So we're looking for a little bit more of a move to the downside. And this is normally how I would set them up. Within a one standard deviation move, basically something that's not that far away from the actual underlying stock, that is where I'm going to target with my butterfly. And the fact that this is a higher price stock, and we got a $35.50 landing place, basically between these strikes, and that's what this is showing over here on this side. All right, so anything else? Okay, that was the first leg was in the money. Your example is B where you expect it to go. Yes, B is where I want it to go. I'm not, yeah, I guess you could say expect it to go, but I prefer that it lands on strike B, and I'd rather have it happen closer to the expiration date. I do that little quip about the about getting the stupid award, but I mean that's true. It's just a funny way to say that you should stick to your plan when you're doing any type of trades in options. And if you stick along in a butterfly too long, it can obviously take off in a hurry and be gone before you know it. And a profitable trade becomes an unprofitable trade in a hurry. So the only time, and I guess I'll put a little bit of a qualification on this. I do a lot of butterflies in my own account. And if I'm doing a 5 lot or a 10 lot, and the market comes down and I can double on the, say I could sell this for $5 to use our example to start with, I might sell half of the position. Every single day that goes by, there's only, and I'm always using the shorter term expirations on these butterflies. I talked about 0 DTE already. This one's only 8 days away. And that's part of the reason why we're going 8 days away, is because we're going to be able to modify this trade if we do this butterfly. And we're going to talk about that on the next event. So make sure you sign up for that now. Or as soon as you get the email. It's actually not sent out yet, but make sure you want to, because that's going to give you the adjustment to the trade. Everybody knows what to do when the market goes with you, right? It's really hard to figure out what to do when it goes against you. So to not digress too much, if I do have a 5 lot on, I don't mind selling 3 of them and keeping 2 alive, or selling 4 and keeping 1 alive. I have had butterflies land right on the strike, but it's usually, by that point in time, I only got 1 butterfly left. 1 unit is the best way to say it. 1 by 2 by 1 butterfly.